Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about a penny stock that a very well-known institution is buying up, and that penny stock is none other than Mullen Automotive, ticker symbol MULN, and the institution that is buying up this company, which is a penny stock, is BlackRock. Now, before this video begins, we will be analyzing 3 articles regarding the latest news updates for Mullen Automotive, but I want to make it clear in the beginning that this is a hyper-risky penny stock that I personally do not own. This is only an update video for those of you who have commented down below that you want to hear my updated thoughts on this company, and spoiler alert, it hasn't changed. I still think this company is a hyper-risky growth company that doesn't seem to deserve my investment, considering that the company is still at a very early speculative stage. I would like to see more proof of concept and some higher production numbers on top of sales to see how they generate revenues and how that will impact earnings. But without further ado, we will go ahead and analyze these articles because a very large institution such as BlackRock is buying up this penny stock. Right now, the MULN share price trades for 26 cents per share. So literally, it is a penny stock worth less than $1. So we're going to be going into why BlackRock has decided to invest into this company. As of BlackRock's latest 13F filing, we saw that BlackRock is bullish on Mullen Automotive, Helios Medical Technologies, Alphabet, which owns Google and YouTube, Tesla, Apple, and Amazon. So in this video, we are going to particularly talk about Mullen Automotive. Mullen Automotive is an electric vehicle company that essentially wants to take the EV market by storm. And although no analysts have covered this company on TipRanks, this does have a smart score of 2, as well as an underperform rating compared to the overall market. Now, this doesn't mean that Mullen is necessarily a bad investment. However, it does say that this company is extremely speculative, so much so that it doesn't even have analyst coverage surrounding it. This is another electric vehicle company, and we've seen many electric vehicle companies come and go, but the reason why BlackRock has decided to invest more heavily into Mullen Stock is because Mullen Automotive is reducing their overall debts on top of strengthening their overall balance sheet. The company is also looking to further penetrate European markets to eventually start mass-producing electric vehicles, but again, this company is still in their early stages of development, and the MULN share price has literally fallen over 97% just in 1 year. If you recall, I have done another video on this particular company, and I predicted that the company would absolutely catastrophically crash in their stock price, at least in the short term, because the stock price was pumped up and hyped up by a lot of YouTubers, but it didn't have any fundamentals at that time, and I still think that they are struggling in terms of their overall finances and their future growth projections. So again, this is a very speculative company, but always make sure to do your own research, because maybe you see that this company could potentially be a diamond in the rough for you, and this allows you to get in very early into this company, and if this company ever explodes and actually makes something of itself, it could make you very, very wealthy, but the chances of that are relatively low as of right now. Another thing that's going on with this company is that the CEO did something very, very bad, in my opinion. The CEO is like a dictator over what happens with this company. So the CEO of Mullen Stock just got a heck of a lot more powerful. But why is this? Well, recently the company released 2 8-K forms, and you don't really need to know what an 8-K form is, but I will tell you what they consisted of. Essentially, the first 8-K form disclosed how Mullen now has a subscription and investment representation agreement with their CEO, and under this agreement, the CEO got to purchase a newly issued Series AA preferred stock share, which is worth $25,000 in cash. So this then begs the question, why would the CEO buy an AA preferred stock that they just made that is worth $25,000 for just one single share? Well, funny you should ask is that there is only one of these shares, and this particular AA preferred stock carries 1.3 billion votes. Now, this is absolutely absurd, so essentially the CEO gets to act as 1.3 billion votes for what the company's future holds. So essentially, the CEO is now a full-on dictator on where the company is headed in the future. Now, this could be a double-edged sword. In one end, if the CEO truly knows what he's doing and he actually wants to make this company extremely successful, then he could single-handedly lead this company to victory and profitability. On the other hand, it really takes away the whole point of owning shares to gain voter rights to where the company is headed in the future, so shareholders can actually make decisions in regards to the company. And in my personal opinion, I think this is very negative, and it shines a very poor light on this overall company and the CEO. Not to mention, the second 8-K form approved a third amendment to Mullen's bylaws. And essentially, the second 8-K form does something similar to the first because this amendment effectively gives the CEO even more power over the voting process. Again, we are seeing that the CEO is essentially a dictator for this company, and the rights of other shareholders are overshadowed by what the CEO wants to do. But then the question becomes, why is the CEO doing this when he knows that it's not going to look good? Essentially, many stock reporters speculate, and I agree with them, that the company's CEO is doing this not only to have full power and authority over the future choices of the stock and of the company, but also to potentially issue a reverse stock split to where shareholders, it doesn't matter what they vote either for or against the reverse stock split, the CEO is going to do it regardless because of all of his voting rights. The reason why Mullen would need to do a reverse stock split is essentially because they have fallen below the $1 price point, which is very bad because the company is listed on the NASDAQ. And the NASDAQ has a rule to where if a company is trading below $1 for around 180 days, that particular company will be delisted from that exchange, which means you won't be able to buy Mullen stock on the open market anymore because they have been removed. Mullen has 180 calendar days to get the stock price above $1, which would currently mean that as of March 6th of 2023, if the company does not gain compliance with this NASDAQ policy, that Mullen will be completely removed from the stock market. So in order to regain compliance, the CEO and the board of directors would like, or at least we're speculating, that they will institute a reverse stock split. And it really doesn't matter if shareholders vote yes or no, the CEO as well as the board of directors have so much pull and voting power, this will go through if they decide to initiate it. And considering that the current price ranges right now from 26 cents to 30 cents, they would have to at minimum do a 1-for-4 reverse stock split or even greater. I think they'll probably pull maybe a 1-for-5 or a 1-for-10, but we're just going to have to wait and see. But I would love to hear your thoughts if you want to comment down below what you think of that and why the CEO is doing what he's doing. Lastly, we're going to end with a positive note regarding Mullen's Tour, and I actually think this has been pretty successful what they're doing. They're getting really good media coverage and PR from this. However, it's really not helping the stock price considering that it is plummeting, just like I said in the video where I said to essentially stay away from this company until the company proves itself. If you're not familiar with this tour that Mullen is doing, basically Mullen is taking their EV crossover and they are going on a tour. And they are visiting various cities to promote Mullen and their overall electric vehicle, which I think is actually pretty smart. It's a good marketing move. So far, their stops and events have been completely booked out and they have received overwhelming positive responses from the various participants that have gone there. On top of that, they have also had a lot of media coverage on this overall tour, and they have even commissioned and recruited various influencers to report on the company. The Mullen FIVE EV crossover, which is the vehicle that is on tour right now, has a completed updated infotainment system, Mullen's proprietary personal vehicle assistant, essentially a smart AI that can talk to you and help you, and facial recognition technology, which means as soon as you get in the car will read your facial recognition just like your phone does, and it will set the car to your personal preferences, whether you like it hot or cold, where you want your mirrors at, how you like your seat, and everything else in between. The CEO CEO and chairman of Mullen, commented and said this about their tour, and he says, "This tour not only allows the public to see what Mullen has to offer and what we have been working on, but also allows us to hear what the public has to say about the Five." He goes on to say, "We are gathering customer inputs from everyone on the tour and will be working on integrating the feedback gathered into the Mullen FIVE over the next few months." End quote. Then in the spring of 2023, Mullen will launch a second leg of their tour with more focus over on the East Coast, because they've already been to California and a lot of other Western states, but now they're coming over to the East Coast. And on the second leg of the tour, they will be featuring the Mullen FIVE RS. This is going to be a high-performance electric vehicle sport crossover that will have, quote-unquote, around 1,100 horsepower from their electric batteries and a top speed of 200 miles per hour with an acceleration 0 to 60 time of 1.9 seconds. So again, this is very good PR, great marketing, they're doing all of the right things, but again, let's look at the business fundamentals. And I'm not a hater, I'm not saying that Mullen is a bad company or they won't make something of themselves in the future, but I'm into investing, not speculating or gambling with my money. I want this company to completely prove themselves, to give me some buffer and some confidence in this company, that this company will be around for the long term. I've seen many electric vehicle companies come and go, but if they can't compete or produce the type of products that they are selling, or if they don't have an impressive competitive advantage, what makes them stand out from other electric vehicle makers? The competition in electric vehicles and EVs are extremely high, so I'm excited and interested to where Mullen will go and what they will make of themselves in the future. But as of right now, I'm going to hold off investing into this company. I don't feel like it's a safe company. There's a lot of uncertainty surrounding this stock, and there are plenty of things that could go wrong. But I would be happy to invest if Mullen ends up proving themselves. But as of right now, I do have a bad taste in my mouth from what the CEO has done regarding his voting rights and how they are squeezing out the voting rights of shareholders. But again, I would love to hear your thoughts down below. Go ahead and smash that like button for more honest opinions on stocks that I give on this channel. Subscribe if you are new, and I'll see you in the next YT video.